In today's video, we're going to take a look at Hercules Capital, ticker symbol HTGC. This is the 9th video that's a part of my portfolio series where I'm doing an in-depth analysis of all 31 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 9th in this series does not mean that this is my 9th favorite stock or my 9th largest holding. And also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Feel free to let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on the Reeves Utility Income Fund, ticker UTG, which is a monthly paying 8% dividend stock that's offered almost 2 decades of dividend increases. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 292.994 shares of Hercules Capital. Their stock pays quarterly dividends, with their last being for 39 cents per share. With the number of shares that I own of this stock, I receive roughly $114.26 every quarter in dividends from this stock. Divided by 3, which is what I like to do, that comes out to roughly $38.08 a month in dividends. Additionally, the stock's been paying a lot of special dividends almost every quarter, ranging from 2 cents on the low end to 15 cents on the high end. Hercules Capital is a business development company that's currently the largest BDC that's focused on venture lending and, according to their website, the lender of choice for innovative entrepreneurs and their venture capital partners. The company makes investments in 4 specific industries. Those are life sciences, technology, software as a service for finance companies, sustainable and renewable startups, as well as some special situations. They're an internally managed BDC that was founded all the way back in 2003, and they had their IPO back in 2005. This makes them one of the oldest BDCs in the sector, and they survived the financial crisis, coming back stronger than ever before. Hercules Capital is one of my favorite business development companies for a number of reasons. There's a lot of things that make them stand out among other BDCs in this sector, which we'll take a look at. The first thing that makes them stand out is their impressive amount of growth. As I mentioned in previous videos, there's a lot of BDCs out there that don't really offer much growth in share price or dividends over time. A good example of this would be PennantPark Floating Rate Capital, ticker PFLT, which has seen a mostly steady dividend payout and share price. However, it's still been a good pick in my opinion because it's usually offering a yield between 8 and 10% along with monthly distributions. But over time, Hercules Capital has seen its share price and its dividend distributions increase. Up until early 2022, HTGC saw its share price grow by a pretty sizable amount since its IPO. But when we entered a bear market in 2022 and saw the closing of Silicon Valley Bank, these two events did result in this stock's share price falling. I'll touch more on SVB's influence in a little bit, but despite that, this stock's share price has still grown, and once we fully recover from this bear market that we're in, then I see no reason to believe that HTGC won't fully recover to its normal share price of over $17. The chart that I normally show from Seeking Alpha is completely screwed up on this company as it's showing special dividend payments like their regular quarterly distributions, so don't mistake these as huge dividend cuts. If we scroll down the page, we can see that they have been issuing a ton of these additional distributions. In fact, they've probably been issuing more of these special dividends than any other company I've come across so far. But remember, these are just bonuses that are never guaranteed or predictable. The reason they've been able to pay so many of these special dividends has to do with interest rates. Once we start seeing interest rates going back down, then I suspect we'll probably be seeing fewer special dividends being paid. Currently, this company has a debt portfolio of $2.97 billion in 122 different companies. They're currently the 14th largest BDC in terms of total assets, according to the Sovereign Wealth Fund Institute. They also hold warrants in 111 different companies, which has a total fair value of $157.6 million. Warrants are a type of alternative investment that gives the holder the right to buy the shares of a company for a specified price during a specific period. Companies issue warrants in order to raise capital for various purchases or acquisitions and are considered riskier types of investments. To my knowledge, all of the BDCs that invest in these startups hold warrants, including Trinity Capital and Triple Point Venture Capital. This slide in their investor presentation really does a great job in explaining why this company stands out from their competitors. First, they don't invest in any riskier types of companies. This would include oil and gas companies, collateralized loan obligation funds, commercial or residential mortgage-backed securities, metal or mineral companies, and no crypto or pot startups. All of these sectors are higher risk, especially for startups, and they can be cyclical depending on the industry. You can also see that they're internally managed, which is another plus for this company. Internally managed companies manage their own investments, whereas an externally managed company hires an outside firm to manage their investments for them. An internally managed company has lower costs, which saves the BDC a lot of money that they can use for other purposes. Internally managed companies are also more incentivized to see their stock share price grow. Salaries and bonuses for management are typically dependent on how well a BDC's NAV is performing. And since for BDCs, their share price typically trades around their NAV per share, this gives them a good reason to see their stock share price go up. Ultimately, internally managed BDCs have goals that better align with us as shareholders compared to externally managed BDCs. That doesn't necessarily mean that externally managed BDCs should be avoided, as there's plenty out there that do perform well, but it is better to be internally managed than externally managed. According to their website, since their founding, they've made over $17 billion in commitments and they've funded over 600 companies. Roughly 95.6% of their debt is floating rate, which explains why they've been able to pay more special dividends over the last year. 93% of their investments are made up of senior secured investments, followed by 4% equity, 1.9% unsecured debt, and 1.1% of their warrants. Their largest sectors include drug discovery and development at 39%, software at 26.5%, and consumer and business services at 12.5%. Roughly 11% of their investments are in companies that are located internationally. A lot of people have been wondering how these BDCs are going to be impacted by the closing of Silicon Valley Bank last March. When news broke out about SVB closing, it did cause the share price of HTGC to fall by nearly 25%. Trinity Capital and Triple Point Venture Growth also saw their share prices fall considerably, since these companies also invest in tech startups. This prompted Hercules Capital to release a statement on March 13th, which went into detail about what this means for their business. According to the press release, Hercules Capital has enjoyed a competitive and collaborative relationship with SVB throughout our own 18-year history, and we have partnered with them on a variety of lending transactions over the years. We do not, however, hold any cash or cash equivalents or have any direct banking or operational relationship with SVB, and we do not expect any direct impact on our day-to-day operations as a result of SVB's closure. This news appeared to calm down investors, as the share price has almost fully recovered from this event, and it's currently up over the last 6 months. In fact, the closing of Silicon Valley Bank appears to have had a positive influence on business development companies. According to Kyle Brown, who's the chief investment officer over at Trinity Capital, more startups are now turning to BDCs as opposed to banks and other forms of raising capital. According to Brown, over the last couple months, they've seen a massive uptick in deal flow given how companies now have less funding options available to them. Many banks and more traditional moneylenders are now shying away from lending money due to the state of the economy. This benefits BDCs because this increases the number of companies that are looking for funding and therefore creates a larger pool of potential clients for them to choose from. Hercules Capital now has a much larger pool of higher grade borrowers coming to them who want funding from Hercules. This means that BDCs can reject more lower quality borrowers in exchange for higher quality companies. In summary, Hercules Capital continues to be a strong BDC despite everything going on in the economy. Their track record, including their share price growth and dividend payments, make them my favorite startup-focused BDC. I like them more than Triple Point Venture Growth, and especially more than Trinity Capital, which I'm not a fan of. They made it through the last financial crisis, which was more serious than what we're going through right now, and I'm confident that they're going to get through what we're going through right now. There's always the potential for a dramatic dividend cut, but if that does happen, then I'm confident that they'll come back stronger than ever, like they have in the past. But with that being said, that's going to wrap up our look at Hercules Capital. If you're interested, feel free to check out my Patreon, where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.